Welcome to Dinar Trend Tracker channel. Have you been anticipating a significant change in the world's currency markets? Hold on tight, because the current situation involving the Vietnamese dong may turn out to be one of the most talked about financial events of 2025. The Vietnamese dong may have recently experienced a significant revaluation, according to reports, which might change the environment for investors, tourists, and anybody else interested in world economy. This may be the news you've been waiting for years if you've been hoarding Vietnamese dong or keeping track of its value. We're dissecting everything in this video, including what's being reported, what's actually going on behind the scenes, and what this might imply for you. We will be delving into a thorough study with actual data, explanations, and insights, so be sure to stay tuned until the very end. Let's begin. The latest information coming out of Vietnam has currency traders and financial analysts buzzing today. A possible shift in the official exchange rate of the Vietnamese dong is the talk of the town. Many are referring to it as a revaluation, and although that term frequently evokes enthusiasm, it's crucial to comprehend the true situation before drawing any judgments. Numerous sources claim that the exchange rate has changed noticeably from previous months, raising the possibility that the Vietnamese government is getting ready to overhaul its currency strategy in the long run. People who have been waiting for the dong to get stronger for years are particularly interested in this. Let's go back a little to see why this is such a significant story. The Vietnamese dong has been governed by a strict system for many years. The State Bank of Vietnam, Vietnam's central bank, forbids the dong from floating freely. Rather, it employs what is known as a controlled floating exchange rate, which permits the currency to fluctuate within a predetermined range after setting a reference rate every day. That band has generally been about 5% higher or lower than the fixed rate. Because of this approach, the dong has remained comparatively steady for years, shielding Vietnam's export-based economy from significant currency fluctuations. However, with this recent change, experts are questioning whether Vietnam is beginning to allow the dong to grow organically. According to sources, the Vietnamese dong is currently trading at about 24,000 to the US dollar. Rumors in the financial community, however, indicate that some banks and exchange platforms are beginning to offer new rates that are marginally stronger than their previous ones. Even a slight percentage change in currency markets might indicate a significant shift in underlying policy, even though this type of movement may seem insignificant. According to several dealers, the Vietnamese government is observing how the market responds to the dong's progressive strengthening. According to others, this might be the first outward manifestation of a bigger scheme to bring the currency closer to Vietnam's rising economic might. Why now would Vietnam desire a more powerful currency? Its economic change is the solution. Vietnam's economy has grown at one of Asia's quickest rates in the past 10 years. Billions of dollars have been spent in its industries and technology centers by multinational corporations from South Korea, Japan, and the United States. Vietnam has increased its exports of machinery, textiles, and electronics. Natural market forces are driving up the value of the dong as the nation's trade surplus increases and foreign investment floods in. According to a number of analysts, the central bank should begin permitting modest appreciation in order to reflect that growth and preserve long-term financial credibility. But there is more to this story than meets the eye. A stronger currency may increase the cost of a nation's exports to overseas consumers. This implies that Vietnam's manufacturing competitiveness may suffer if the dong rises too quickly. For this reason, the government must balance promoting economic growth with safeguarding its export advantages. Vietnam's policymakers are likely to favor gradual, controlled changes because a significant, abrupt revaluation would upset exporters and interfere with business planning. Therefore, even while a rate adjustment may seem insignificant at the moment, it may be a highly intentional step in a longer process that takes months rather than days to complete. Investors who are keeping an eye on this development are thrilled since a dong revaluation may indicate fresh prospects. Global financial groups have been speculating for years about whether or when the Vietnamese dong will see a substantial gain in value. Numerous people have likened it to other revaluation tales in other developing economies. However, the Central Bank of Vietnam has prioritized stability over rapid expansion thus far. The news of today have garnered a lot of attention because of this. Depending on how and where they purchase their currency, investors holding Vietnamese dong could see significant gains from even a slight appreciation. Let's examine the true motivations behind this movement. A number of things affect the dong's value. Vietnam's remarkable GDP growth, which continues to surpass that of many other emerging countries, comes first. The increase in foreign direct investment comes in second. Vietnam is being chosen by large corporations as a manufacturing and supply chain option to China. The third factor is the nation's comparatively steady inflation rate, which has preserved investor confidence and purchasing power. The dong experiences upward pressure as a result of all these factors working together. The difficulty for the government is to control that expansion without creating instability. In relation to the US dollar, the Vietnamese dong has fluctuated within a small range during the last 12 months. To prevent the rate from fluctuating too much, the central bank would sometimes intervene by purchasing or disposing of foreign exchange. Experts observe, however, that the tone of Vietnam's financial officials appears to be a little different this time. The necessity of preserving market alignment and flexibility, which frequently come before more substantial regulatory changes, has been underlined in public comments. The timing of the appearance of these words may not be coincidental. As foreign reserves strengthen and the economy keeps growing. Speaking of reserves, among the economies of Southeast Asia, Vietnam has amassed one of the biggest foreign exchange reserves. The government can now handle its currency more assertively because of the trust and flexibility this provides. The central bank can protect the dong if necessary or let it become stronger without running the risk of causing a market panic if it has sufficient reserves. This is one of the main reasons why many analysts think Vietnam may be getting ready for a controlled revaluation period, or even a progressive currency reform, in which the value of the dong increases gradually. To put things in perspective, devaluation and valuation are not the same. When a currency is revalued, it gains strength against other currencies, and when it is devalued, it loses strength. In this instance, revaluation and the dong's increasing value are the subject of conjecture. In the past, nations have revalued their currencies when they believe the economic foundations are solid enough to sustain them. This entails steady inflation, steady growth, and rising investor confidence. Many of those requirements are presently met by Vietnam, which is why there is more talk of a stronger dong. However, it's crucial to avoid drastic overnight revaluations that cause a currency's value to suddenly double or treble. Central banks like to make adjustments gradually in order to prevent economic shocks, which almost never occur in modern economies. Therefore, despite the spectacular appearance of today's data, a controlled correction is more plausible. Vietnam might establish fresh, modestly stronger daily reference rates or permit the dong to trade within a slightly broader band. This won't happen all at once, but it can still add up to substantial appreciation over time. What, then, might cause additional strengthening from this point on? Keep an eye on these three important indications. GDP growth comes first. The dong will come under increasing pressure if Vietnam's economy keeps growing at a rate of 6 to 7% each year. Foreign investment comes in second. A stronger dong is supported by the US dollars that are brought into Vietnam by the increasing number of manufacturers and tech firms that relocate there. Third, demand worldwide. Vietnam's trade surplus may grow if the global economy stabilizes and exports rise, further pushing its currency higher. Each of these indicators contributes to the overall narrative. It's also important to consider how Vietnam's currency is impacted by its regional position. Vietnam needs to carefully balance its approach as its neighbors, including China, Thailand, and Indonesia, modify their monetary policies. Vietnam's export competitiveness may suffer if neighboring currencies depreciate while the dong gains excessive strength. For this reason, gradualism is the goal of policymakers. Instead of shock, they want progress. Instead than focusing on speculation, the government wants to align with long-term stability and international credibility. However, investors and watchers around the world pay attention to even the smallest change. According to some observers, the ICE's recent actions may signal the start of a multi-year revaluation process. According to this perspective, as the economy develops further, Vietnam may permit the dong to appreciate gradually, perhaps by a few percent annually. This strategy is similar to that taken by other developing Asian countries making the shift from export-driven to consumer-driven growth. While retaining export strength, a stronger dong over time would increase domestic purchasing power and enable Vietnamese citizens to afford more imported items. The early effects of a stronger dong may not be noticeable to the average person. When converting dollars to dong, travelers may see somewhat better exchange rates. Costs may be somewhat lower for companies who import goods from overseas. The larger narrative, however, is psychological. A stronger currency is frequently an indicator of economic optimism in a country. It can boost national pride and draw in more investors. This moment feels as much symbolic as it is financial for a nation that has spent decades laying its economic base. There are dangers, of course. Exports may decelerate, export-related unemployment may increase, and inflationary dynamics may change if the dong gains too much power. Vietnam's central bank will therefore probably keep a careful eye on every little action. Thus far, their approach has been to maintain steady growth and modest inflation. That balance could be disturbed by an abrupt increase in the value of the currency. The cautious tone of the banks indicates that they are dedicated to taking little, steady moves rather than making big, abrupt changes. What is the bottom line, then? The Vietnamese dong is still one of the most stable controlled currencies in Asia today. Vietnam may be about to enter a new phase, one of gradual strengthening that reflects its increasing global significance, however, given recent rumors of an adjusted exchange rate. You should pay close attention to this tale whether you're an investor, a tourist, or just interested in global economics. Whether today's adjustment is a one-time event or the beginning of a larger monetary policy may become clear in the coming months. Before we conclude, keep this in mind. Currency fluctuations are excellent predictors of a country's economic trajectory. They impact more than just investors. They have an impact on national identity as well as trade and industry. Vietnam has made a stunning transition from a developing economy to a major global industrial powerhouse. That trip would enter a new phase if the dong kept getting stronger over time. Therefore, stay informed, pay attention to currency rate updates, and abide by government policy declarations. The Vietnamese dong's 2025 tale is far from over, and the upcoming update might be much more significant than this one. Thank you for viewing. Please remember to hit like, subscribe, and enable notifications if you find this breakdown useful so you don't miss any of the most recent currency news and analysis. Because the world of money never sleeps, you might be surprised by tomorrow's update, so stay tuned.